Hi, thank you all for coming. There's a lot of us here, so hopefully we're going to keep it short and sweet. But I want to start with a quick show of hands from the public. If we think about banking, let's say 20 years out, I'll give you three options, and I want to see, where your collective thoughts are. Who will be the largest bank in the world? Will it be A, Google, B, one of the existing banks, like Citibank, or a Chinese bank, or an Indian bank, or C, a fintech yet to be either discovered or already working? And so, who thinks it will be Google or Facebook or Amazon or one of the tech giants? No one does. Great. Who thinks it will be an incumbent bank? No one does. Who thinks it will, so two people, thank you. Who thinks it will be a fintech either that we already have seen or will have yet to see? All right, so you guys are not voting. This is why Trump won, just so you know. Because people didn't vote. You have to vote. All right, so with that as an opener, and with the jury still out on the question, I'm going to turn my first question to Michal, who in her everyday life thinks about how she can bring more value to her customers and work with fintechs. And so, Michal, the question to you is, what are the strengths that you think fintech bring to the table, to the equation, and how do you think about working with them? What do you think are the partnership opportunities?
So by asking that, you are assuming that my answer to your question was 3, right?
Well, I think actually it's a fourth question, which is all of the above, right?
Okay, all of the, exactly. That's why they didn't answer. So first, good morning. My name is Michal קיסוס Herzog. I'm the head of innovation and digital at Bank Leumi. Actually, I'm very pleased and honored to be here, and it's great seeing all of you. It made me understand that the financial industry actually realized that we are not immune to the disruption that we are facing. And that's why this panel is going to be so very interesting, in my opinion, so looking forward. Regarding your question, this morning I searched the word fintech at Google Trends. I wanted to see if I get the same result as I searched it from Tel Aviv. So what do you think? Did I get the same result? I'll help you. Yes, it's the same result, which is very crazy. It's interesting because you see actually a plateau, right? And around 2015, you see like a peak. So it's like a parabolic move going out of a long base, and which means that we are all looking at it, investing in it, and because we understand that fintech does bring a value to us bankers. And why is that? And the answer is clear. I don't think I'm innovative in my answer, and it's that because those fintech companies are agile, for sure. They are their risk appetite is greater than ours. They are single purpose, and they really bring value to the customers. But I think they need us. So if there are several methods to this cooperation, we can see open banking method, right? Sorry for giving that example, but what BBVA just did with the market, with the API market, that shows that they offer those fintech companies a way to leverage BBVA's capabilities. So this is one method we know about. We can cooperate, which is right, basic, and we can invest like Santander does. So having all this means that that's our opportunities with
So it's
fintechs.
attractive to you for you to work with startups.
Yeah, for
All right,
sure.
so then
yeah.
let's
we
turn...
just, but the challenge is not just finding it and saying that we want to work with them. The challenge is implementation. You know, everybody say integration. You know, they're using this buzzword, but because everybody know the fintech side, but what about the integration side? So I think that's our challenge.
So with that, let me turn to the other side of the table, to the startups. How do, and I'll start with you, Ido. How do you see the sort of this model of working with banks versus just competing with banks? You know, what do you think are the different models, the different options today for a startup that is entering the fintech space?
So around the working with banks, you're either trying to, you know, use some of their existing infrastructure in a way that can leverage your product or to build it on top of them. For example, we can't currently replicate in my startup Riskified some of the banking infrastructure and payments infrastructure that the banks have with the card networks. So we're utilizing that piping in order to build a layer of service on top of that. So that's kind of using or seeing our value add on top of them, and that leads to kind of a more equal opportunity and synergies between both of us.
But do you see, so you think that the synergies are more important than the, let's say, or that are more valuable than let's say competing with banks or with incumbents?
I mean, it depends. If you look at the lending industry, at one point they were saying, you know, we have a lot of technology, we own the relationship with the clients, and it looks like at some stage some of the banks are saying, okay, we feel that we can get into this space and have the capabilities and do it ourselves as well. Right? So at the end of the day, it is kind of a business decision where you see your value or your capabilities. Is it better to partner, to build, to buy? So I think they're in the various aspects, right? Because banking is a very wide area that you're going to see some startups try to compete. At some point, they even try to say, okay, maybe we should be more friendly. I think that happened recently with PayPal and Visa, right? PayPal kind of said, you know what, we don't think we're going to be a direct competitor of Visa. Let's collaborate a bit more. The pie is big enough for everyone.
Okay, so Ben, let me turn to you now. This is my hypothesis, and I'd like to hear what you know, given the deal flow or the large number of companies that you see. My hypothesis is that that the direct to consumer, the B2C model in fintech has slowed down a bit. That some of the big companies, the flagships of fintech, have either slowed down or failed to get a lot of traction, and there has been a significant pivot to more B2B models where, as Ido was saying, there's more appetite to work with banks rather than compete with banks, because getting to scale is actually quite challenging. What are you seeing, particularly here in London, being such a big hub in fintech, in terms of where the business models are going?
Well, thank you. I think I should start by really endorsing and agreeing with the introductory comments that we're seeing, I think, a shift towards away from the idea of giant killing and more towards a collaborative model. But I should also explain straight away that I have probably a rather unusual perspective on this, because Level 39 sits right in the heart of the Canary Wharf financial district. So admitting my own availability bias, I think I would say that certainly what I see is wholehearted, red-blooded collaboration going on. But that's because I exist in the sort of place where you would go in order to do that. So clearly there remains significant activity among organizations that are trying to go direct to consumer. I think that you're absolutely right to highlight how hard that is, how costly it is to build the kind of trusting relationships which have the capacity to substitute for the kind of relationships which people build with organizations in which they need to vest great degrees of trust. And one shouldn't underestimate, especially at a time when there have been some recent relatively short-term shocks, the long-term durability of financial institutions and the deep bonds they have with people, even as those people sometimes are angry about them and sometimes bitter about the services they provide, they still are often the organizations that people have grown up with. And so going direct to consumer requires great patience and great resources. And certainly what we see very much in Canary Wharf, and I think this is probably true around the rest of London, is a much greater degree of collaboration and engagement. And I expect that will continue, not least because, as we've already heard, leveraging the deep trust relationships, but bringing new capabilities to bear through them is a win-win.
So before we jump to the, let's say, a bit of the contrarian view with Asaf, who I think still espouses more of the D2C view, Revecca, I'd like to ask you, given your experience with working with large institutions in some of these sort of collaboration projects, what do you think are the, first the challenges for these two very different animals to play together, and then, where do you see the big opportunities for this collaboration to grow?
Thanks. Morning, everyone. So for me, when I think about the opportunities for banks, I think really it's three things. So it's making sure that they can really embed the capabilities that they need in their organizations. I think it's harnessing the buzz of disruption that's in the market at the moment and combining that with the fact that they've got the customer numbers, the customer base, and leveraging that. And then finally, I think it's being inspired by the mindset of agility and entrepreneurialism that we see in fintechs and using that to create outcomes that are really customer focused, start to create some really amazing customer experiences and do that in a way that's cost efficient. And I mean, there's obviously challenges if we think about the banks. They're dealing with legacy technology systems. Every single time there's a wrinkle in their customer experience and something that's bad from the customer's point of view, there's a challenger or a fintech or even, larger, more established players like PayPal who are there ready to serve the customers in a better way. So I think going forward for banks, it's going to take a shift in mindset and internal culture in how they make themselves more customer-centric. And I think a great example of a bank that does this is Fidor Bank. So they are so customer-centric. They create all their products in collaboration with their customers. So everything from the price, the name, they test and learn with their customers. They're iterative, they're fast. And I think the second thing as well is it's going to require an investment in technology. So looking at everything that's happening out there at the moment with open banking and APIs and PSD2, making sure that banks are set up to see this not as a threat, but as an opportunity, and that they're not just treating this like another piece of regulation they have to deal with, but really seizing the opportunities from that. And I just have one example that I think is quite nice, quite timely actually. So the Royal Bank of Scotland have launched what they call the Blue Bank of APIs, and they're actually running a hackathon this week at the Floor in Tel Aviv. So they're running a hackathon to create prototypes and looking for great solutions that they can possibly embed in the bank.
Good. I think Santander needs to do a better job at talking about the great things we do because no one is using us as an example. Michal, before I jump to Asaf, any sort of comments on what Revecca just said in terms of how we work with startups and the challenges and the opportunities?
Yeah, well, I said that before, and I can only refer to Lumi, right? And you can refer to Santander. But the challenges, as I said, is regarding the implementation. Well, it's hard because we are different. Banks are different from startups, and it's in the core, right? Because and when they start dealing with banks, they don't always understand how slow stuff can be, and that's why the expectations need to be set up upfront. So the moment the expectations are realized, I think it's easier to implement. And that's why also we are dealing with the startups that has a lot of that has money, that raise money already, because they need that patient. And from the bank side, I think we understand now that we need to move quicker, and that we need to understand that doing mistakes is okay. Right.
So what's your message for the startups that want to work with Leumi? What do you tell them now? Like the 10 or 20 startups that are sitting here and want to work with you?
First, that we are open, like, and we understand, and we understand the market, and we understand what's going on. We understand that we need to cooperate. And as Rebecca said, seizing the opportunity, I think we're there. I mean, strategically wise, we don't. That's our strategy. So we are open to discussion. We are open to POCs. We are open to innovation is pretty much a part of Leumi's life.
I just had a comment to add to that, thinking about what you're saying around the challenges of implementation in a bank. I think for me as well, I think the fintechs have a part to play. I think that they need to have a willingness to understand the environment that the banks operate in, understand their internal structures and the challenges that they're facing. And I think there's so many great ideas out there, but I think the fintechs that do best are the ones that are willing to really collaborate with the bank, understand the challenges that they face, and flex themselves accordingly.
Okay.
This answer is actually true for both sides. Yeah. Just banks need to accept, also know to accept failure. That's something we don't do really well, but it will change.
So, Asaf, you've heard the invitation. You're welcome to collaborate. You're welcome to work with banks, but I think you feel differently. Tell us why.
A bit different. You all mentioned here that the shift in the business model from B2C, direct to the consumer, to B2B. End of the day, someone needs to provide the services to the end customer. And that's what we do at Plus 500. We are a B2C provider, and we believe that in order to provide the best service to our customers, to the retail customer, we need to do the best and to serve to provide our product on the best way. Meaning it can be through the investment in the technology that we are offering to our customers, in the user experience that we are providing, and also the optimization of the services and the products that we are offering. It can be through, for us, it's easy to localize the product, to localize the service, whether it's through providing the relevant languages, the relevant payment methods to our customers. So, for example, if you are from Germany, we will offer you the most popular payment method that are available in Germany. We will like Sofort, or if you are from Netherlands, it will be GiroPay or iDeal or whatever it can be. For example, in Australia, it will be BPay. We will also provide you with the most popular instruments or the most popular features that are relevant for your countries. For example, if you are from Germany, your customers probably would like to trade on or deal with German products rather than US ones. Of course, they will provide all the availability to trade on and services that are available in the US, all the instruments there, together with the most popular and the most relevant instruments for the customer itself.
John, where do you put your money? You've heard about the two models. You probably see every single company in the space that passes through Israel. Where would your bet be? Is it D2C, B2B, or anything?
I think that the testing, okay. I think the conversation is really about both. And there's a stage, because if you try to go to market initially as a supplier to banks, it's going to be very, very tough. If you come up with a new business model and a new service and you say, we're going to go sell this to the banks and get the banks to buy into it, even in today's environment where banks realize that the threat they face is existential, and I think we've downplayed that here a little bit. I mean, the threat is existential to banks. And I was on a panel just recently in Singapore where the entire panel voted on this question that you asked, that the biggest bank in the world is going to be Tencent. Okay? And I think most banks today get this. They understand that they have to innovate or else. And therefore, it's actually a really cool time to be working with banks because they are moving more agilely. They're still not startups than they've ever been. I mean, look at what you're doing at Santander. Look what Lumi's doing. Okay, you guys are acting differently. But if you're a startup and your initial go-to-market is, I'm going to go sell to the banks, you're going to suffer and die. Okay, and therefore, you have to take your product somehow to the consumer, prove the model, prove the service. Okay, and then the banks will come and partner. And I think that there's no, it's a tough way. I mean, we're doing it, you know, we're both an investor and a fintech ourselves. So, you know, we went out and said we're going to go crowdfund equity for companies. And some of the lawyers and the banks I spoke to in the beginning, because I did speak to them, said, we'll bring you kosher food to Leavenworth Federal Penitentiary, because you can't do that. Okay, this is regulated out the yin-yang. You can't start crowdfunding today. So we had to prove that it would work and that I wouldn't go to jail. And we've proved both. And now we're partnering like crazy with banks all over the world. And I'm very excited about it.
And so, given that you're going through this sort of expansion yourself, what's your recommendation to startups that you know that are thinking about that they've proven a bit of what they're doing in Israel and now are thinking about, do I go to the US, do I go to the UK, do I go to Europe? Are UK and Europe the same thing after Brexit? Where would you tell people to focus?
I would be all over Asia. We're finding our most traction in Asia. The banks there are very, very aggressive and interested in innovation. The US is still, you know, pretty innovative, and Europe too. But you know, it really depends on the company. For example, you mentioned RBS. We have a company in our portfolio called BioCatch, which does behavioral biometrics, and they just yesterday announced a huge initiative with RBS and NatWest to do essentially fraud reduction, or call it fraud elimination. And I think it's never been a better time to partner with banks, but if you go there first, you're going to have a long wait. You've got to get out and prove that this works somehow with the consumer and the service, and then go to the banks.
Ben, from your 39th floor in Canary Wharf, are you seeing the same trends that John is talking about? Where is the money going? What are the companies that are gathering the most interest from investors?
Well, I think it's very difficult, isn't it, not to be seduced by short-term trends on this, and clearly there have been a couple of shocks just recently, which I think may have distracted people from the underlying movement. I think John's point absolutely stands that you need to talk about both, and if I suggest that engagement and collaboration with financial institutions is easy, I certainly don't mean to. It's very difficult. It's very difficult both to build direct consumer relationships. It's also very difficult to build relationships deep into regulated organizations with legacy systems and the complexity and cultural challenges they face, notwithstanding the pressure that, again, John has mentioned that they are responding to, and many financial institutions moving faster than they have perhaps in their 100 or more years of history. So I certainly think that a blended approach, which demonstrates to all concerned that other stakeholders, be they customers or corporate partners, are activated, is very compelling for investors. Of course, some of those institutional partners, as you know, have some big issues to contend with and some great uncertainties to deal with, which may make it harder for them to collaborate, at least in the shorter term. So again, the draw of Asia is strong. The draw, for the time being at least, of opportunities outside of the European Union, or at least uncomplicated or relatively uncomplicated by the uncertain relationships in Europe. are perhaps more prominent at the moment.
Good. Before I go to the Kylkalist challenge, I'm going to add just my 2 cents on this sort of B2B or B2C model. And I actually like both, a bit of what John was saying. I think that the B2C affords a unique opportunity for the startups to really figure out what the clients want instead of having a bank tell them what they think the clients want, and shape the user experience and the value through their own direct to consumer experience. And then when companies are successful in turning that into a platform that then they can offer banks, I think it becomes a very powerful model. And in fact, we have partnered with a number of startups that effectively did that, right? They started as direct to consumer in the US, got really, really good product, but failed to get significant traction, the type of traction that an investor that has seen the hockey curves in e-commerce from the late 2000 looked like. And they switched to bringing all of that great technology and great user experience to partner with financial institutions. And I think that is actually a very robust model, and one that, at least as a bank, one that is working for us. Cito, I see you that you want to. No? Okay.
We need to see it works for the fintech companies regarding profit and their model, not just ours.
Correct. That, I think, is the next challenge, to see if that model is sustainable for fintechs, because there's a risk here that either they fail or they become solution providers for the bank, and that is a challenge as well. Yeah.
I just want to make one more point, which I think is more relevant. I don't know if this is working. More relevant to the broader audience, which is that most startups are not aware of how much their tradition, especially in the enterprise software, broadly defined space, how much their business is at risk, because their traditional markets have been financial institutions. I mean, about 40% of the revenue of enterprise software is in the financial institutions, including insurance companies and whatnot, broadly defined. And as they are changing so fast and trying to jettison or reform legacy systems, startups need, outside of the fintech space, need to understand that this turmoil is going to affect their business strategies, because the traditional markets and customers who they've sort of lived on for their profits, and not just startups, by the way, the big enterprise software companies, the Microsofts and the Oracles, they're in a really changing environment, because the banks are not going to be the same customers as they've been until now in any way, shape, or form.
So with that, I'll go to the Kylkalist challenge now. And the question here is, if we see on one side what the fintechs are doing in the fintech space, and what the banks are trying to do, and what the software incumbents are trying to do to survive, as John was saying, the question to you all, and I'll let you jump, whoever wants to do first. The question is the fintech space saturated now? Are we seeing too much? Are we seeing a lot of, more and more Me Too business models that are just repetitive, and there's nothing really new, and we'll see a bit of a slowdown and consolidation? Michal, you go first.
I'm afraid I don't want to take the hubris sin by answering that, okay? But I think it's the second part of your question. Maybe we're seeing, from the client perspective, that's great, because the more options that you have, it's better for the client. But for us, I think we're seeing more of the same, and that's harder work for us to choose between the same idea that has sometimes it has it's yellow or red or pink or green, but it's basically the same, and then you need to understand what are the differences. So yes, there are probably more fintech companies today serving us with the same idea.
Yeah, I agree. I think it's really challenging for the banks, actually, because they're approached by so many fintechs, so many startups. How do they begin to differentiate between them and understand which ones are well suited for collaboration? I also think as well from a consumer point of view as well, if I just think about it personally, I have like 50 apps on my phone, you know, like personal finance management apps, things to help me budget and manage my money, and I probably use 2 of them. So I think the thing for fintechs is they really need to differentiate themselves and offer the customer something that's new, rather than just a copy of what's come before.
I think here it's like the more the merrier. You get the opportunity, you give the opportunity to the customer to choose the best product for him. From plus 500 perspective, you can say competition is good because first of all, you get the product out there, more people get to know the product, and you know it's a healthy competition, and you know, may the best one win.
I think you asked us to be short and sweet, and I'm sorry to say I've never really been either of those things, but I think now's my chance. I think that the best and most exciting years of fintech are very much ahead of us, and I predict that there will be great change, and many of the key participants, and not just the big tech firms, and particularly Asian tech firms, there will be lots of new entrants from interesting and challenging directions.
I think we're experiencing a momentary slowdown. The markets are speaking. Fintech investment seems to be down about 20 to 30% year on year, both here in, certainly in the UK, I think it's down a little bit steeper. But there are areas that are completely underinvested and are emerging, such as insurance tech. Okay, in other words, banking got the first wave. Insurance is going to be, you know, I think a very, very interesting area. There's some great companies in Israel and the UK that will emerge in that area for sure.
So thank you all. We've run out of time. I hope this was short and sweet. And again, thank you all.